In this video, I want to explain what a breaker block is, just like this guy asked me to do that, even though I've made several videos on breaker block. And if you're conversant with the ICT concept, this is part of the institutional reference points that were taught by the founder of ICT concept. And if you look at this list, I have 7 of them. These are the most powerful institutional reference point, and a breaker block is part of them. Looking at these numbers, you can see that a breaker block is prioritized as the second most important institutional reference point that you must pay attention to. So let me show you what it is and how to identify it on your chart, and then basically how to use it for trade entry, because that's the most important thing. There are a lot of my subscribers that actually asked me to do this. Even as you can see, this particular guy have asked me to make this video, even though I have a dedicated playlist where I put almost 4 videos that I've made on breaker block alone. It is a very important concept. You may check my YouTube channel, the link is on my bio to get all the videos, but let's get into this particular one. So what exactly is a breaker block? Now we have 2 types of a breaker block. The first one is what we call a bearish breaker block, and then the second one is what we call a bullish breaker block. Let me start by sketching what it is basically for you, so you can see it and easily identify it when you see it on a chart. Now, this is what we call a bearish breaker block. Assuming we have a market that is going in this way. Now we have a swing like this, and we have a retracement back into that range. We have a defined trading range, and then suddenly we have market going up again, making this impression like we have broken above this level, which is a break of structure. Now, this is a basic way you can see market moving, okay? But when we see this movement that just happened coming back straight down into this level, when we see it crashing down into this level, where we can see that it took out this low that was formed, because this is a higher high, and then this is a higher low, if you're conversant with your market structure. When we have this kind of structure formation where we took out liquidity above this level, and then suddenly we see market crashing below this low, it just acted like a fake breakout above this level, took out liquidity, because liquidity resides above all highs and all lows. This is a normal concept in the market. So this is just like a fake breakout. When we have this happen, we are said to have a breaker. You can see it break above this level, which is a break of structure, and then suddenly crash down. This is one of the most powerful way to identify a trade entry. Now, if you are conversant with an order block, when you're trading order block is basically the last bearish candle that price printed at this area before seeing a bullish candle that probably has engulfed it completely. So when we are looking at an order block is basically going to be here. In this regard, since we have a downtrend, this is going to be something like a red candle. Let me delete this guy so I can show you. I want to be very basic for you to understand what I'm trying to explain. If you make this as a red candle, just a notation, nothing important about that. This is your bullish order block, and ideally when you have your order block, price is basically supposed to react around this order block, okay, and then start going up again. So those that are trading order block know that when price comes to this area, this order block should reject price and push it up. But this order block is not active anymore. Price traded through it, it could not hold price. So this order block is no longer an order block now. It is what we call a breaker block. It is what we basically call a breaker block, because we have seen price actually break above this level where we have a break of structure, and then crashing down this order block, taking out the low here, and then when we see price come back to this order block, it is now what we call a breaker block. In this regard, a bearish breaker block, because price is supposed to go bearish from this level. This is just like your normal head and shoulder pattern, but this is an advanced way to trade. This one is now your breaker block. So when you see this happening, you're going to just take your entry at this point, and then have a very good risk management that you can see here, probably below the breaker block, or you can bring it below this low. I'm going to show you how to practically use this, but I'm just trying to show you the important aspect of this concept. So let's go to the chart and have a look at this particular concept so you can use it as a professional trader in your trading career. So if we go back up here, Let me see. Okay, look at what I'm saying. We have price behaving from this place, normal price behavior. Look at this, a break of structure at this area, and then we have price came back, take up to this level, another break of structure. Look at what happened. We have a defined range here, a break of structure here. Let me just expand it a bit so you can see what I'm saying. If you see this break of structure, you are probably going to see that price have actually broken above this level, and then this is it. It is almost like a fake breakout. You can see it here, expanding it a bit, and then all of a sudden price crashed down, taking liquidity on both sides. Price crashed down. Remember, I told you that the last bearish candle is now acting as our word, as our breaker block, because ideally price is supposed to just react around this area. If I show you that, price is probably supposed to react around this area, since this is now acting like our bullish order block. Price should just react from here and then push up again, but this time around it has not reacted. Basically price just moved down from that place. You can see price just completely moved down from that place, you can see, and then it came back and acted around this area. So this is now our breaker block, bearish breaker block, because price came back and tested it. Since we can see that this body, the moment you see your order block being completely violated by the body of the candles, it is no longer a valid order block. It has been mitigated. Please get this right. I'm trying my best to explain it to the very basic level. An order block should reject price from the body, but if you see the body of that candle closing below the order block, it means that that order block is no longer valid. So if price come back to this area, it is where our entry should be. Okay, this is it. This is it. Let me just adjust it properly for you to see. If you can see what I'm doing right here, this is your breaker block. Your entry should be basically somewhere around here, and then remember I told you that your stop loss should be defined based on liquidity. My own, I'm just keeping it above this level, and then I will start from 1:1. This area is what I call a landmine. I don't want to joke with these kind of areas because price may probably react around here. And then you can see, if you can pocket that and minimize your risks and have a very good trade entry. Now, there is a better way to enter trade with this kind of information. When you see a breaker block happening or forming, if you see a breaker block forming, there was a time somebody actually asked me the relationship between a breaker block and a change of character. A change of character is basically a shift in market direction, which we have also seen right here, price taking out the last low and then happening right here. We can see a breaker block where there is a change of character too. This is a change of character, this place. If I just adjust this to show you that this is a change of character, it is basically a complete shift in market, because we are seeing an uptrend from here, an uptrend, and then from here we have a downtrend. If we have it come back and then we have a breaker block, it makes it a better confluence for you to take your trade from. So let me show you another superior way you can also take trade with this particular information. Looking at this, you can basically take trade once you see this. This is the 4-hour time frame that I'm using. Once you see something like this happening, you can use this opportunity to go to the lower time frame. Since you're using 4-hour, you can go to the 1-hour time frame and then have a better view of what you're looking for. Now look at this. In the 1-hour time frame, you can see something really important. Look at this. If you take out this to this level, because you're looking at what is happening, you're looking at what is happening at this point. If you play this a bit, you're going to see what exactly I'm saying. So can you see, this is basically an important area for you. Even this fair value gap can be your entry. Can you see this fair value gap can be a good entry for you, so you can have a good entry with a minimized risks. This is a better way to enter this kind of trade. When you see price coming back to this fair value gap, remember this color up here, this particular gray color, is where your breaker block is, but you have a fair value gap inside the breaker block, which gives you a better understanding of what you're doing. So if you're entering your trade, you can basically enter your trade at this place. The middle of this particular fair value gap is what we call the consequent encroachment, where price may probably come is an ideal entry point, and then your stop loss, remember, I want to keep it above here from the 4-hour time frame, and then I will start from 1:1. 1:1 is basically somewhere around here, and then see price react. Even though you can see this acting weight, but you have gotten a very good entry from that level. You can see price acting at this level. Now this is just an example of an entry with this kind of concept. If you have a question, guys, let me know in the comments. You have to stay patient with this kind of entry. This is what trading is. It is not just something you do in a day. You have to be patient. You have to learn the business of patience. And you can see after patiently entering in the lower time frame, you can see that price actually went in your direction. Now once you see something like this happening, you keep on expanding this and reducing your risks. This is basically how I use this concept. There are different ways you can use this concept, but I'm teaching you the way I personally use it. That is why I'm showing you this in detail. So you can see how it works like this with the breaker block. Let me see if there's any example again, then I show you, and then I close this chapter from here. Not even far from here, I can see another one that happened right here on the 1-hour time frame. Let me see. Can you see this level? We see price coming, and then we had this. Can you see? This is a break of structure at this level. Then we had market crashing down. Look at this. The last red candle that printed, if you can see it, is your breaker block. This guy. If you can see, this guy is your breaker block. And then you have some pips to put in your pocket. Price came back and then tested it. Then it came to this area. So this is where you can enter your trade from here, this level. You can decide to go to the lower time frame, since this is 1-hour time frame, and then have a beta entry. You can see another institutional reference point. If you want to learn all the institutional reference point, I basically discuss them on my YouTube channel. Guys, you have to subscribe to get details of this. Now you can see price actually came to this level where you can see it's almost 1:2. So guys, this is a very good example. Let me find a bullish breaker block again and then show you, and then I close this chapter. Can you see this pattern? Can you see this? You actually took out liquidity below this level at this area. Can you see? And then price came crashing above this place. So this is a typical example of what we are saying. Now, what exactly is your breaker block in this regard? This particular green candle that price printed is now your bullish breaker block. So you'll have to map it out like that. Now look at this. It's very important you notice this. You don't just pull your trigger because you just see price coming like this. You have to wait and patiently wait for it. This is the rule. If price did not touch this, your breaker block, you are not going to enter trade. So this is not an entry. This first one is not an entry, but this second one is your entry. When price comes to touch it, you have to be patient and wait for it, no matter how long it will take, depending on the time frame you're trading. If you cannot find an entry on the pair you're trading, you have to be patient and look for another pair if you can see your trade entry from there. So you can start from 1:1 and then adjust for profit as price gives you exactly what you're looking for. So you can see this happening time and time again. A breaker block is this green candle. Let me even show you that properly. This green candle that price printed, as price comes back to test it, that is where you will find your entry at that point. So it is basically an important point for you to notice. Please guys, try it, go into your chart and check for breaker blocks. If you have any question or if you have anything you want me to cover, I will do that. This looks like a breaker block too, but this time around a bearish. You can see liquidity being cleared above this level. Even if it is just the week that you see clearing liquidity, you consider that as a liquidity being cleared. Then you have it crashing down below this area, then coming back up, you enter your trade at that point, and then you have a good trade happening at that level. So guys, if you have any question, let me know. Just like I said, I will be leaving this part of the video right here. If you have not subscribed for my channel, go ahead and do that immediately. Thank you for watching guys. See you next time.